What is going on, everybody? And in this video, we're providing a state of the market and stock picks for September 7th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. But one thing I must say, I do believe a big move is coming. That should be good news considering some of the chop we've gotten lately. So nonetheless, state of the market. What do we got? The biggest day this week is going to be Thursday. We got the ECB monetary policy, and then we have Powell that day as well. Now, I believe it's a conference that Powell's in. It starts at 10 a.m. Eastern Standard Time, I believe. I'm not sure if it's going to be a pre-recorded thing or if he's going to actually be taking questions. Nonetheless, if he is in any kind of open forum, that's fair game for the market to go pretty volatile. So just be mindful of that. And kind of trying to depict where Powell's mindset is coming into these next rate raises that are just around the corner, about 3 weeks away. And we do have core CPI next week. So we got a lot going on over the next couple of weeks. But the good thing is this is the last month of Q3, and this is going to put us in a good position, I think, for a potential rally. Now, October isn't the greatest of months. It's typically a very dark month, but this year has been anything but typical. So we could potentially get some sort of a rally. It really just depends on how everything plays out this month. But I'm getting ready to try to position myself in a good position on this potential next leg down if it does happen, because that cycle is coming back around, particularly big tech cycle is what I'm watching. So with that being said, tomorrow we might get a little bit of movement, but the biggest thing here is that 3,900. As long as the market can hold the 3,900, we should be okay. I don't really think it's going to hold. I think the only reason it's holding because if some reason ECB comes in lower than the 75-point basis move, everybody's been talking about a 75-point basis move from the ECB. If that's the case, again, this is very historical. Just be mindful of that. That's going to could potentially make this break. If it doesn't, if it comes in lower than that, that could be that our monetary policy might dial back a little bit, and so the market might pop. I don't believe it. Powell's already given us the forewarning that things are going to get quite painful here pretty soon when it comes to monetary policy. So with that being said, we're really watching that 3,900. It needs to hold. Now, if we do get any sort of bounce, again, this new metric I've been using, essentially the Fibonacci level, I don't typically use these, but trying to be a little bit more accurate as far as when we could see potential reversals. Again, you're looking for a more explosive move like this one. So we're kind of getting into that buy zone for the long side here. So that's what I'm kind of thinking. If anything does happen, I'm kind of looking for this thing to dip down. I'm looking roughly around the 3,800. That puts us right around the 75-point basis move. So that would kind of line up with essentially my thesis that's been going on all year. And it's been pretty accurate all year up to this point. So until something is proven otherwise, I haven't seen this anywhere else. Just something I've kind of noticed throughout this year. Whenever a specific point basis is mentioned, the market heads to that point and then it kind of sits there and idles. Sometimes a very short span, sometimes pretty quick, but once it hits that spot, it typically pops back up and starts running. So kind of watching that, especially coming into the end of Q3. If we can hold this, looking for us to potentially try to make a higher high here. Maybe we still have to break this daily trend that's pretty strong. So really kind of watching what happens in this potential next leg down. I do think we're going to leg down here, but I think, again, it would put us right there at the 3,800 is really what I'm watching. So if we do get any sort of pop, which it's been really weak on the pops, especially with a lot of the Fed being very hawkish again, if anything does change as far as the Fed front, that's going to cause us to potentially start running. I think that's what we're holding here, because the market, if it feels like we've hit peak inflation, which you can't tell if we hit peak inflation until after a span of time. Even after a couple reports, doesn't mean we're not going to get a report that's going to pop us back over. Again, we've had 2 months of no school. Think of all the gas that was saved during that time. Now you have tons of issues going on with gas in Europe, and the fiasco it's already starting to cause, and it's not even the winter months yet. Things are going to get really wiry here in the next couple of months in Q3. You're going to see some more implementation of what I've been talking about, but we potentially even going to see a really bad Q4, depending what happens here. Again, some of the things I thought it would be Q3, I think we could see some more cracks, if not breaks, here in this next earnings cycle, and then potentially full-on breaks here in Q4, especially when you start cycling in winter months, and then potentially even Q1 of next year. You really might start to see it. That might be the full blowout Q1 of next year, especially in the middle of the winter months, and all the layoffs and where monetary policy has brought us to that point. So right now, again, short term this week, watching that level 3,900. Again, if we do pop, I'm really watching this the 4046 here. If we can get that far, but the thing is like I said, I haven't seen the strength. Every time I've wanted to short this on a pop, we ain't getting any pops. The market is weak. The market doesn't want to. It's not in any kind of earnings cycle. If we do kick off an earnings cycle, it's going to be more towards the back half of the year, right around that monetary policy. Once we get that, then we'll make a move from there. But we'll see. Again, if we peak anything over a 9.1, we could potentially facing a 100-point basis move. I think at that point you're striking a lot of fear in the market, and you're going to revisit this 36 with a potential break here. So just be mindful of that. So that's kind of where we're sitting at. As far as Bitcoin goes, again, Bitcoin's going to follow the market. It's actually starting to break here. It's 1816. If this does break here, I see this going way lower. Again, 15. Psychological numbers, I would say 15 would be the next, then 10K. You start getting around that 10K mark, I think you're really kind of, I don't know how quick it's going to actually stay there is my thing. I think we will develop a new base. Maybe we drop down to the 15, maybe we consolidate there, maybe we drop down to the 10 and consolidate there. Really just kind of watching and seeing what happens here. But again, a lot of the events that are happening these next couple of weeks, next couple of days, are going to change that a lot. Oil has come down a little bit. This is one thing that's very, very, very concerning, is the dollar is at 110. Is at 110. And TLT has actually been really interesting as well. TLT took a massive dive today. And this is what I talk about, this volatility. It pushed the market down, but the market itself, the general index, didn't to go with it. So what I'm watching is if we get a retest of the 108 here, and then potential massive fall down in TLT. And now if that happens, again, if there's a lot of volatility here, it doesn't matter which way this goes, to be honest. It really doesn't drive the market either way. What drives the market is essentially the speed at which it's moving. And so if it starts selling off heavy tomorrow, that could be a bad sign going into ECB, going into Powell, that the Fed are probably full on out going 75 points, and potentially potentially 100. Really just depends on the core CPI. Now, Europe has hit over 10%. They have continued to reach new highs in their inflation rate, and that's something that is concerning about us and could potentially driving us even further down here now too. So we'll see what happens there. Tesla, again, Tesla really needs to break this 265, which I think it will. Just give it time. I think it'll break it before before the end of the month. I'm kind of really again watching that 240. Again, that's the buy zone right there is really what we're looking at. If we do start getting crazy again, I think anything at 212 is almost an instant buy, in my opinion, especially going into Q3 and going into the holiday season. Again, we don't know what October is going to have in store for us. Again, normally a normal traditional cycle, it's a bad month. But being said, things haven't been traditional at all this year. So we're going to have to see how this does play out for Tesla. But really watching that level, I don't really expect any kind of upside for Tesla. We've had a break, retest, and then another retest here trying, but I think this is going to eventually break here and at least bring us down to that 240, like I said. So really watching that. Going forward, BA, as far as value is concerned, we had the break. Now this thing is kind of just slowly melting off. And again, in any kind of recession like this, you're going to get slow melt offs. You're not going to get any kind of flash crashes like you saw 2 years ago. That is the reason that happens, is because you get something out of left field. That is a black swan event, which doesn't occur very often. And so what you're going to see, even if there's any kind of housing, something happens in the housing sector, you're going to get a slow roll off. It's going to be this choppy, nasty grind down. You're going to have your rallies here and there, but you're going to continue to have this nasty, choppy ride down. So BA is no different. I foresee that's what's going to happen there. So again, you get support for BA around the 140, roughly around the 130, and then 121 and roughly around the 116. So kind of watching those there. Again, I don't trade BA, but if you do, those are the levels I would be watching. Banks, again, still holding that 112 really well. If it does break there, again, this thing is going to flush pretty heavy down to 106. So really watch that. I think the biggest thing to do with banks is just I don't play them. You can play them, but is to mark off key levels. And then if you get those alerts during the day, at least you know kind of where the market's going to go from that point. So it does help a lot, at least marking them. And I do that. So I do mark the banks because when they start moving, the whole market's going to start moving again. If GS has been one of the strongest ones here, it had a great earnings. If it can't get back above 328, GS could be in trouble here and could potentially start rolling off for bank earnings here. Again, you're looking mid-October is what we're looking at, but we should get that's about right. So I got a couple more weeks in monetary policy to focus on, but I'm really starting to aim for that getting in earnings mode. So that is sooner on the corner. I think we'll get one more strong leg down, and then that will be our entry point, getting ready for the cycle, in my opinion, of earnings. So short and sweet, that's pretty much what I got. Again, we're getting a little bit more movement. I've actually dialed down to lower time frames and been kind of playing that, watching that more closely, because a lot of these moves are very, very tight. I don't like these moves being so tight, but you got to be adjustable if you are in any kind of market, or just set out and just wait until your setup comes. You should know what your setup is and only take that setup. You shouldn't be chasing. That's the worst thing you can do. I don't like critiquing other people's trading. Everybody trades different, but if you're chasing and FOMOing, I would say I would almost guarantee you that you're eventually going to get caught in that trap. You're going to catch one that is essentially going to take all the profits away. So just be mindful and be very careful of stuff like that. It does take a lot of due diligence, a lot of patience. My trading is very boring, and it should be boring. That's what makes money. It should be like a machine and come in and out and do what you should be doing, and that's the way you trade, in my opinion. If you want to be a successful trader, you trade the same stuff. It should be boring. You don't want exciting moves. You want very foreseen moves. If you can predict the move and it happens almost 9 out of 10, 8 out of 10 times, then why would you chase anything that you have absolutely no idea what's going to happen? It's been pumping when it's been sitting flat for 12 years. Why would you be buying in on something like that? So that's just, again, just my 2 cents. But nonetheless, if you made it this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.